Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Chris Griffith, who's the CEO of base metals at Vedanta Resources, who are a global powerhouse of minerals, power and energy companies within the group, where these businesses have multiple subsidiaries within the portfolio of operations and projects. And those projects comprise of operations in zinc, lead, silver, copper, iron ore, steel, nickel and aluminium. Chris has a wealth of experience within our industry and previously served as the CEO of Goldfields and two other major mining businesses, Anglo American Platinum and Kumba Iron Ore. Now he's with Vedanta. He's going to tell us a little bit more about the company, discuss some critical minerals or discuss some important issues within the critical mineral space, and also the geopolitics impacting on our industry. Hi, Chris. Welcome to the podcast. How are you doing?
I'm good. Thanks, Rob. Great to be with you today.
And yourself. So obviously, like I said, you've been in the industry for quite a long time. I'd imagine most of our audience will know of you or heard of you. But for those that don't know you, I wonder if you could just tell us a little bit about your career. And obviously, as I mentioned, you've been in obviously the senior and executive space for quite a while now. So I just wonder if you could just run us through your career.
Sure, Rob. Thanks very much. Yeah, I've been in the mining industry for, I think this is going to be my 35th year. So I'm a mining engineer. So I grew up in the mines. I started, on the mines at the very lowest positions as you do when you're a young graduate. And I sort of came through the ranks like most mining engineers will, sort of worked through every different mining rank until I became a general manager of a number of operations. I was with Anglo Platinum at the time. I then ran the joint ventures for Anglo Platinum, which was 6 different joint ventures with different companies, different operating models. And then I was asked to be the CEO of Kumba Iron Ore, which I led for sort of 4 or 5 years. Through very interesting times, through the height of iron ore prices, then the global financial crisis, while we were trying to build new mines and build the portfolio within Kumba. I was then asked to come back to Anglo Platinum, which I was then the CEO of Anglo Platinum for 7.5 years, where we did a very big restructuring of the business and repositioned the business for the business what it is today. So I think I would regard that as a very successful part of my career. I then left when I believed that sort of all the things I needed to do were done, and then moved on to Goldfields, and I was at Goldfields for 2 years. And then after the failed Yamana transaction, I then decided to give the company in the new CEO space. And then moved on, and Vedanta knocked to my door, and I was very excited to be able to look at something new. And so this is going to be my 4th CEO role in the last 20 years. So yeah, looking forward to this role. I've been in this role for now the last 6-7 months or so.
Yeah, obviously you've had a distinguished career. What was some of the major highlights you would say that you had during your time or 35 years in the industry?
Yeah, I think that the thing about being in the industry for sort of 35 years, you're pretty much going to see everything. You're going to see some great times. You're going to see some tough times. I've led mines. I've built mines. I've restructured mines. I've taken over and built on, previous great things that leaders before me had done. So I think all of those have been highlights for me. Of course, it's never all plain sailing, and sometimes they're tough times. And I guess you learn more in the tough times than you do in the good times, which is the strange part of life. But I don't think I could sort of pinpoint one particular issue. I've had fantastic successes with the people that have that have been around me and the great companies that I've worked for over those 35 years. So, the companies that I've worked for have offered me great challenges, great positions, and I've really enjoyed my mining career thus far, and sort of look forward to this next phase of my mining career.
Yeah. And before we speak about Vedanta, was there anything during your career that you felt, looking back, things could have been different? Maybe in what you've done and maybe decisions that you made. And obviously, like you said, there's obviously ups and downs within the mining industry. Looking back, was there anything that you would have liked to have done differently?
Rob, I don't think so. I mean, I had both, my career as the CEO of Kumba. We had some tough times with the global financial crisis, but during that time, we were building new mines and expanding the existing operations. We faced many different legal challenges here in South Africa and with some of our business partners, all of which we prevailed under. Now, I mean, perhaps looking back and saying, "Oh, I wish life had been different and we hadn't had all those legal challenges." But I think we did the right thing for the company and for the countries in which we operate. We were successful, which meant that I think we've done the right things. And then it was tough times when I came back to Anglo Plats. It was tough in that we had to retrench 14,000 people in the business. It was 60,000 people at the time. So, again, it would have been great had we not had to do that, because, nobody comes to work saying, well, I wish I could put some people out on the street. But we did that to save the company, and I think we did that well. And subsequently, we were able to re-employ many people. So again, I think some of those things, rather than if they'd been different decisions, I think some of those you say, well, gee, it would have been great if I didn't have to go through those tough times. But it wasn't just me. I mean, that was the companies that we were operating in. In Goldfields, I guess the question is, do you wish that you hadn't gone after Yamana? And I think the answer is no. It was absolutely the right thing, I believe, to do for the company. It would have made a very, very different Goldfields. But Goldfields is a great company. We were just outbid by a consortium of other companies. So again, do I wish that it had been different? No, I don't. I think we did the right thing. I think we chased the right deal. We were just outbid. The fact is that we got a $300 million break fee. It's not a bad prize for not getting the deal over the line. So no, I don't have any regrets. I think in a more wiser version of myself now, perhaps I look back and say, well, maybe I could have been a better leader early on in my career. All of those things are just part of, I think, growing and the leadership journey that we're all on. So no, I've been incredibly blessed. I've worked for great companies. I've worked alongside great people, and I've been myself led by great leaders. So no, Rob, I think I'm in a very good space looking forward to this next chapter in my life. Again, it's a new company with different ways of doing things. So not only can I contribute, but I can learn at the same time. So yeah, the learning journey continues, and I've got no regrets.
Yeah. So I just wonder if you can just tell us, give us an overview of Vedanta, and also obviously talk about your particular division, which is base metals.
Yeah, I mean, Vedanta is a really unique company. It's one of these truly global conglomerate mining companies. The majority of the operations are based in India, which itself is a fascinating country in a fascinating time, as it's now the largest and fastest growing economy in the world. It's the fastest growing economy in the world as opposed to being the largest. It's got operations in India, but also Middle East and Africa. And it spans all sorts of things like oil and gas, zinc, lead, silver. So, it's got a very good presence in both metals and minerals, iron ore, steel production, power production, the base metals of copper and zinc. So a truly fantastic conglomerate working in India, Middle East, and Africa. But it's come to a time now in the company where each of the businesses have now grown to a sufficient scale and have got sufficient growth in their own rights that the company now believes that actually each of these different verticals, these different companies, can stand on their own 2 feet. And Vedanta now, if you look at all the numbers, we are woefully undervalued as a company. And so the thinking within Vedanta at the moment, and I think pretty much everyone is concurring with the view of the company, that this is the right time for the business to be unbundled or demerged into six separately listed companies. So, and we can do that on the back of the scale now and of the quality of the assets and the quality of their growth profiles. And the view within the company, well, perhaps before I do that, let me tell you what those 6 companies will be. So it'll be Hindustan Zinc, listed in India. And then more of the technology companies within Vedanta will sit alongside Hindustan in one company. So that's, for example, the semiconductors, display glass, and those types of technology companies will sit along Hindustan Zinc. That's the first company. But then there's also Aluminium, which has now become the third largest aluminium player in the world. There's the base metal business that I run. There's oil and gas, power, and then the iron and steel business. So 6 separately listed companies focused on their specific commodity or commodities that are closely associated with them. And we believe that each of these businesses now have the ability to grow to 10, 20, and 30 billion-dollar companies in their own right. So with the unbundling of the Vedanta business, which should be complete sometime towards the end of the year, early next year, we think that the value of the sum of the parts is going to be substantially greater than the Vedanta business today, even though Vedanta in itself has doubled its share price over the past year.
Yeah, obviously you mentioned obviously the merging of these obviously business units into 6. What would you say this is relevant to the mining industry, and also who should be taking notice?
Yeah, I think it's a great question, Rob, and if we look at first of all, the shareholders of the existing company should, we think, be very excited, and actually shareholders are giving us that feedback. And that's the reason why the share price of the company has doubled in the past year. Because I think just generally analysts and shareholders can see that value and see the value of these companies now focusing more narrowly around each of their commodities. And we believe now we'll be able to attract the kind of capital that'll be needed to grow these companies, to really deliver the potential of the growth in each of these different companies. But at the same time, I think the companies or the countries in that host our assets, both India, in the Middle East, in Africa, South Africa, Namibia, Zambia, those host countries will also benefit because of the amount of investment now going into those individual businesses. So the countries benefit, the communities benefit, the labor forces benefit, shareholders benefit. So I think all round, this is a story that's been developing up to now as the company been growing, but now is an ideal time for Vedanta to demerge this business into separate 6 different listed companies. And everyone believes, even though we've seen a doubling of the share price, that you're going to see a collective value of this company substantially higher than what it is today. And also because of the pure play focus of each of these companies, the valuation multiple that goes with that will be substantially higher for each of the individual businesses as well.
And what were some of the challenges to actually move and delist these companies and move into 6 business units if you're one company? I imagine there was quite a few challenges. Was there any challenges you'd like to highlight?
Well, I think we're in that process now, so I don't think there's anything that we didn't anticipate. Of course, you've got to get all the All the lenders, the bondholders of the company have got to agree to that. You've got to go through various sets of approvals, both the stock exchanges and the regulatory bodies within India. Your shareholders have got to vote for that ultimately. But that's still work in progress. But I don't think we're certainly not encountering anything that we didn't anticipate as part of that approval process. That approval process, of course, hasn't been completed, and sort of there's step-by-step processes that'll take us to what we believe will be final shareholder and regulatory approvals by the end of the year.
Everyone's obviously talking about critical minerals, and especially copper and zinc. Both are obviously key components of Vedanta's base metals portfolio. What are your growth plans, and how are you looking to expand into these obviously growing markets?
Yeah, thanks for that, Rob. Look, Vedanta's got some of the world's largest resources of critical minerals. In the case of the base metal portfolio, both in Hindustan Zinc, they already are more than 1 million tons of production of zinc. They're now the third largest silver producer. But in the case of the base metal business that I will be running, we likewise have a very similar size of zinc portfolio to that of Hindustan Zinc. So about 35 million tons of resource and reserve. And with that, as I said, Hindustan are producing over 1 million tons and are well on their way to 1.5 million tons of zinc production. So currently, we only at 250,000 tons of zinc production. We currently, as we speak, are in the middle. We're about 60% complete with Gamsberg Phase 2. So that's that's really just duplicating the Phase 1 plant that we've got at Gamsberg in the Northern Cape. So we will be over 500,000 tons of zinc by 2 years' time from now. And then we have a pipeline of projects with high-grade zinc. So this is between 8 and 10% zinc going underground. So actually just replicating what we've been able to do in India. And we'll be, by 2030, our estimation is that we'll be over 1 million tons of zinc production. So, that's on the back of one of the largest zinc ore bodies or scale of ore bodies anywhere in the world. On the copper front, currently we have custom copper smelting in India and the UAE in Fujairah. And we're also looking at an expansion of that business in Saudi Arabia, of which that feasibility study is very well advanced. So we currently have 250,000 tons of copper rod production in India and about 100,000 tons in Fujairah. Now, with about a 400,000 ton expansion and potentially also additional expansion in India, we have a pipeline of projects again to get us over 1 million tons of custom copper production, let's say by 2030, same kind of time frame. But I think the real jewel in the crown is the fact that KCM, the Konkola Copper Mines in Zambia, which has been sort of under government control for the past 5 years, we announced at the end of last year that we had reached agreement with government and now just needed to go through the regulatory approval process that Konkola Copper Mines will be returned to Vedanta in the early part of this year. Now we have substantially complied with all of the regulatory processes, and we think that KCM now, in the next week or two, that's how close it is, then KCM comes back to Vedanta. Now, KCM is one of the world's largest and highest grade ore bodies, any copper ore bodies anywhere in the world. So we have 16 million tons of resource and reserve at 2.4% copper. I mean, you look at many different copper deposits, they're trying to build copper deposits on, less than 1% copper. This is 2.4% copper, and it's got more than 50 years worth of life. So this is a fantastic asset. Vedanta has spent more than $3 billion on this asset in the past. We have committed that we would spend another $1 billion in addition to the $250 million that we're going to pay for outstanding creditors which debt was incurred under the control of government. So this is one of the best assets in the world, copper assets, at a time when everybody's looking for copper assets. It's brownfields, it's not greenfields. We've got a commitment to invest $1 billion, and we think that we'll be over 300 kilotons of production from our Zambian Konkola copper mines in the next 5-6 years or so. So at a time when the world is looking for critical minerals, copper, zinc, and other critical minerals, we have, as Vedanta and as the Vedanta Base Metals, some of the best and largest scale and highest quality ore bodies anywhere in the world. And we've got already production expansion underway and have got ambitions on the back of our growth potential to grow to more than 1 million tons of zinc and more than 1 million tons of copper production that the world desperately needs by about the time frame of about 2030.
How is the geopolitics impacting on the critical minerals industry from obviously your perspective?
So it's very interesting when we think about the geopolitics of countries and how they're thinking of critical minerals. I mean, over the past few years, we've all sort of seen what's been happening. Some countries, for example, putting bans on or nationalizing lithium assets, for example, or putting bans on the export of unrefined products or unbeneficiated products of critical minerals. So we've seen some of that already over the past 5 years. In some countries, for example, governments are restricting the amount of foreign ownership on critical mineral assets. So that's already been at play. China, I think, have led the world. I think they were years and years ahead of everyone about vertically integrating so production and smelting and refining. And I think the rest of the world have sort of taken a step back and saying, oh, have we let sort of China get too far ahead, for example? So the US, Canada, even Indonesia, Philippines, countries have all got different strategies around trying to say, well, how do they catch up? How do they make sure that they're not left behind? And how do they get the benefit of critical minerals that they have in their own countries? What we are seeing, though, so this is going to play out in different ways with these different countries all having different approaches. But the one common thing is that almost all of these different countries are talking to African countries. So what I think is positive about that, so for example, the US concerned about how far China is ahead on critical mineral production and not wanting to, in their words, not wanting to be beholden to the Chinese, are saying, hey, well, we better do some of this ourselves. What they're all doing is they're all talking to African countries, and they're all providing more capital for new mining projects. So actually, rather than this be seen for us as miners as a negative thing, I think we're seeing this as something really positive. Because number one, people want to put more money into Africa, people want to put more money into critical minerals, and are willing to put money into the mines that perhaps in the past have been starved of capital, or people have been thinking that, oh, perhaps there's, the risk associated with some of those countries is too high. So in this particular case, I think the geopolitical sort of changes that are happening are going to be positive for mining. I think they're going to be positive for mines in Africa, and I think we're going to see more money and capital coming in to finance these mining projects.
Obviously, we've all heard about location. Are your mines, processing plants and customers located favourably, or do they just operate where the ore bodies are?
Yeah, and I think that, when you look at mines, I mean, clearly you can't take your mine and move it somewhere else. So when you look at the ore bodies that we have in the jurisdictions, we have South Africa, Namibia, Zambia. So in those mines, we think that they very well positioned. They're in favorable mining jurisdictions. Zambia, certainly under the leadership of President Hichilema, has changed the investment dynamic in Zambia, and you've seen the amount of investment that has come behind favorable investment climates into Zambia. South Africa, for all its noise, is still a fantastic mining jurisdiction. And so we think that the location of our mines, South Africa, Namibia, Zambia, we're very well situated in good mining jurisdictions. And then where our processing facilities are in India, the Middle East, now in Fujairah, and possibly moving also into Saudi. Actually, what we think is, we've got India with the world's highest growth rate and is going to be like that. And everyone's talking about India being the China of 20 years ago. So we see India growing at 8% per annum, and the demand for metals and minerals is probably growing at twice that. So we're seeing very substantial growth. So it's a great place to be in terms of the demand locally, the customers are all there. So that's certainly the case for India. And then what we're seeing also in the Middle East, the massive growth that's happening in Saudi Arabia, is that we just happen to be in the best neighborhoods where we're seeking to expand. So our mines, we believe, are in fantastic jurisdictions. We think our processing plants in India and the Middle East are also in the best locations. That's where the growth is. That's where the customers are. And that's where we are. And that's where we're expanding. And not only for the base metals, the majority of the rest of the Vedanta business have got a very, very significant footprint. The oil and gas business, for example, is the largest oil and gas producer in India. And many of our commodities are either largest or second largest producers in India. So we are incredibly well positioned to benefit from the growth, but also to contribute to the ability for that growth to happen in those countries. So, I think we're very well positioned to take advantage of good mining jurisdictions and great sort of the world where the growth is happening across the globe. That's where we are situated.
Yeah, obviously Africa is rich in resources. What do you see? How do you see Africa growing as a continent in the mining industry? What would you say? What do you? I wouldn't say necessarily forecast, but what is the growth of the mining industry within Africa over the sort of short to medium term?
Yeah, I think you in places, for example, like DRC, where, some years ago, that was seen as a country where only the bravest miners would go. Now there's so many different mining companies are operating in the DRC. So I think you see Southern Africa, I think sort of around South Africa, which is a very well-established mining jurisdiction, sort of growing further north. I think you're seeing again the growth that's happening in Zambia. Further growth will continue to happen in the DRC. West Africa, I think, is a bit of a mixed bag. I think there's been some of the challenges politically with the amount of coups that we've seen, for example, on the West Coast, the western part of Africa, has meant that perhaps some of the growth that could have happened there has been delayed. But, we've seen, Ghana's been a stable mining jurisdiction. Many of the big mining companies are in Ghana. We've seen growth in Liberia, for example, where Vedanta has iron ore assets and is seeking to grow. Further afield, there's, so many different opportunities. So even though some of the challenges in West Africa have, in the past been deterrents to growth, I think you're seeing many more mining companies realizing that they need to be there and they need to find a way of operating there. I think that's one of the benefits, again, of Vedanta. We operate in Africa. We know how to operate in Africa, as many other mining companies are. And for those companies that know how to operate in Africa, I think we see the potential of Africa as fantastic. There are challenges that we don't disregard. And, any company that does business in some of these jurisdictions has to have has to be careful, has to have their eyes wide open. But I think the potential for Africa growth with the demand for critical minerals, and as we see the growth of the world needing growth in mining, you'll continue to see expansion of mining in Africa.
And lastly, what's the outlook for Vedanta as a business over the sort of short to medium term? And I suppose focusing on the base metals division that you're the CEO of.
Yeah, I think it's a great way to end, Rob, because it's sort of where we started. The potential for Vedanta is enormous. We've already seen 100% growth in the share price in this past year. I think as the demerger happens, which I think is one of the key things to watch for, that I think that's all lined up to happen, and you're going to see just enormous additional growth coming from the demerger. Secondly, each of the Vedanta businesses in their own rights have got fantastic growth opportunities. Everyone, I mean, the zinc business is growing, the oil and gas business is growing, aluminium have just coming to the end of an enormous investment period that they'll now be able to start benefiting from, more than 3 million tons per annum of aluminium produced. The base metal business I mentioned has got growth potential for 1 million tons of copper and 1 million tons of zinc. So all of the businesses are in a similar position. The iron ore and steel business, the power business, and even some of the technology businesses. So that's the second key thing I think for Vedanta. So the first is the demerger. The second is the growth potential of the business. And lastly, I think just the enormous progress that Vedanta's made on ESG over the last number of years is a great way to say, but it's not just about the mining. It's also the contributions that we make to society, the contributions that we know we're responsible for the workforce, the planet, and the environment. So these are things that are have got incredible focus. I think really positively that perhaps most people may not have been aware of is the fact that in the S&P mining rating, so that's the old Dow Jones Sustainability Index that rates mining companies on their ESG performances. In the past we used to see Anglo American and BHP and Newmont were always at the top of those rankings. Well, the top 3 positions, 2 of them are occupied by Vedanta. So Hindustan Zinc occupies position 1, and Vedanta as a group occupies position 3 globally in the Dow Jones Sustainability Index, or the S&P. So, that's perhaps folk in the past that wouldn't have thought an Indian-based company would be leading the global ESG rankings. And I think that may have gone under the radar. I mean, certainly we tell everyone who will listen to us of the great work that we're doing on ESG. But, I think we've sort of quietly gone past most of the mining majors in the contributions that we're making around ESG. So to summarize that, I think the demerger, the growth, and the fantastic work that we're doing in ESG shows why that this is a company to be watching, and certainly a company to be investing in, and a company to sort of be closely associated with.
Yeah, Chris, thank you for your time. I really appreciate you give us an overview of Vedanta and obviously the plan of action moving forward with the business. I'd like you to obviously come on the podcast maybe later on in the year or next year, and maybe speak about some of those ESG initiatives and what Vedanta are doing to obviously help educate our mining industry, because you, like you said, you are in the top 3 twice in your ESG initiatives. So I think it'd be a great conversation to have, and hopefully our audience can learn something from what Vedanta are doing. If our audience wants to follow Vedanta's story and obviously look at more the base metals and what you guys are doing in that space, how can they go about doing that? Are you across any social media platforms?
Let me get that detail to you, Rob. Of course, we are a listed company in India, so we're transparent and very easy to follow the work that we're doing. Soon we'll have 6 different listed companies, and you'll be able to follow us with the same level of transparencies. But I'll make sure that you get that detail, Rob.
Yeah, certainly. And we'll include those in the show notes that accompany this anyway for easy access. So, Chris, thank you for your time and hope to speak soon.
Super. Thanks, Rob. Thanks for the opportunity.
Thank you. You enjoyed that. Hope you enjoyed that episode. I appreciate if you can share this episode amongst people within the industry, but people outside of the industry and all around the world. Keep spreading the word. Keep spreading talking about our industry, mining, because it does need to be spoken about among people that are not in our industry, just to showcase what we do and how important our industry is to future growth. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.